Hi, everybody, and welcome to the December 2024 Economic and Market Update presented by Commonwealth Financial Network. My name is Brad McMillan, and I'm Commonwealth's Chief Investment Officer. Markets rallied in November as investors poured into U.S. stocks following Donald Trump's election victory. All three major U.S. indices ended the month in positive territory, with the S&P 500 and Dow finishing November at record highs. The impressive gains were due to rising investor optimism for faster growth ahead, and even bonds were up, driven by lower long-term interest rates. While it was a great month for U.S. investors, though, international stocks ended up down. Both developed and emerging markets fell during the month on rising concerns about a stronger dollar and increased trade restrictions under the incoming administration. Rising political uncertainty in Europe also contributed to the sell-off. But while the election was the major story, though, there was also solid improvement in the market and economic fundamentals. As we wrap up the third quarter earnings seasons, so far U.S. companies are sharply outperforming expectations, with the average earnings growth rate for the S&P 500 now at 9%, more than double initial analyst estimates. This strong earnings growth is a good sign for investors as fundamentals ultimately drive long-term results. The economic news also continued to come in better than expected. Consumer demand held up well in October, with both personal spending and retail sales growth coming in strong. Spending was driven by consumer confidence, which rose to a one-year high on improving expectations for both current conditions and future growth. Historically, higher levels of confidence have supported even faster spending growth, so this was another very good sign. Beyond the consumer, we also saw business spending and confidence do well. Durable goods orders rose, a sign of solid business investment, while service sector confidence rose to a two-year high. The service sector accounts for the majority of business activity in the country, so improved confidence here is also a good sign for future growth. But while the solid fundamentals are a good foundation going forward, there are also, of course, still things to watch out there. Here in the U.S., even post-election, we still have political uncertainty around the new administration's policies and priorities. Outside the U.S., we have both geopolitical and economic risks, with the ongoing wars in Ukraine and the Middle East, as well as the slowdown in China, all of which will certainly be affected by changes in U.S. policies. There's a lot going on out there. But despite those risks, overall, we're still in a good place as we finish out the year. Market fundamentals continue to show signs of improvement, while the economic backdrop is still healthy. While risks certainly remain, the most likely path forward is still for economic growth and market appreciation. And that's a good way to end the year. That's it for this month's update. Thanks for watching. I'll see you again next year with the latest news. So until then, stay safe, stay sane, and stay healthy. And however you celebrate, I hope you have a peaceful and happy holiday season.